The Federal Reserve finished their meeting, which lasted for 2 days, and I must say that their predictions are falling apart. Let me explain what happened. The Fed raised the interest rate by 0.75%, and the current interest rate is now at 3 to 3.25%, and the Fed indicated that they'll do larger increases in November and December as well. Previously, they said their target rate was 3.8%, but now they're expecting to reach 4.6%. The Federal Reserve goal is to bring the inflation to 2%. The Fed is raising interest rates, and they're going to continue raising interest rates until the inflation is back down or on its way back down to 2%.
We are highly attentive to the risks that high inflation poses to both sides of our mandate, and we are strongly committed to returning inflation to our 2% objective. At today's meeting, the committee raised the target range for the federal funds rate by 0.75 of a percentage point, bringing the target range to 3 to 3.25%. And we are continuing the process of significantly reducing the size of our balance sheet, which plays an important role in firming the stance of monetary policy. Over coming months, we will be looking for compelling evidence that inflation is moving down, consistent with inflation returning to 2%. We anticipate that ongoing increases in the target range for the federal funds rate will be appropriate. The pace of those increases will continue to depend on the incoming data and the evolving outlook for the economy.
Here's what the scary news is. The Federal Reserve does not see the inflation falling down to 2% until 2025. The Fed acknowledged that there's going to be a big slowdown in the economy. The CPI report for the month of August is 8.3%, which is very far from the 2% target rate. Fed Chairman Jerome Powell said he's going to look at core inflation for this. Therefore, we should not expect Fed pivot anytime soon. I'll make a detailed video on Fed pivot over the next few days. When the Fed pivot happens, this will skyrocket the stock market. Don't forget to subscribe and watch out for that video. During the Q&A session, a couple of reporters asked questions directly when the Fed pivot would occur. Jerome Powell stressed that Fed pivot will happen only when core inflation is back to 2%.
Hi, Chair Powell. Thank you for taking our questions. Gina Smilik from the New York Times. I wonder if you could give us a little detail around how you'll know when to slow down these rate increases and how you'll eventually know when to stop.
So I will answer your question directly, but I want to start here today by saying that my main message has not changed at all since Jackson Hole. The FOMC is strongly resolved to bring inflation down to 2%. And we will keep at it until the job is done. So the way we're thinking about this is the overarching focus of the committee is getting inflation back down to 2%. To accomplish that, we think we'll need to do two things in particular to achieve a period of growth below trend and also some softening in labor market conditions to foster a better balance between demand and supply in the labor market.
So you had said that Americans and businesses need to feel some economic pain as we go forward. How long from here should Americans be prepared for that economic pain?
How long? I mean, it really depends on how long it takes for wages and more than that, prices to come down, for inflation to come down. And what you see in our projections today is that inflation moves down, significantly over the course of next year, and then more the next year after that. And I think once you're on that path, that's a good thing, and things will start to feel better to people. They'll feel lower inflation. They'll feel that the economy's improving, and also if our projections are close to right, you will see that that the costs in unemployment they're meaningful, and they're certainly very meaningful to the people who lose their jobs. And we talk about that in our meetings.
So as per Powell, we might have economic pain till 2024, 2025. So far, what we know is the interest rates are going to keep going up 2 more times this year, November 2nd and December 14th. We also know quantitative tightening is going to pick up pace. This is going to get ugly for the stock market, crypto market, the housing market, the economy in general. Home affordability has reached a 30-year low. Jerome Powell said the housing market needs to go to a correction. The scary thing here is once inflation is above 5% in advanced economics, it usually takes on average 10 years to drop to 2%. But like I mentioned in the earlier video, the Fed cannot sustain high interest rates as banks and financial institutions parked $2.2 trillion. The U.S. yields crossed 4%. The rate of change is just staggering, leaving people and businesses no time to adjust. The U.S. government has $2.2 trillion in treasuries that will soon be refinanced to 4%, costing us hundreds of billions in interest per year. The Fed prints money, the stocks go up. The Fed takes money, the stock market goes down. You don't fight the Fed. The problem lies not in the stock market, but in the debt market. Look at the 10-year yield. The 10-year yield goes up, then basically we're screwed. As the interest rates rise, the Fed needs to pay more interest on the debt. They're no exception, and they have a budget. If the interest rates go up, the Fed cannot withstand the higher interest rates for an extended period of time. Like I mentioned in the previous video, the Fed cannot sustain paying high interest rates for longer duration, therefore the Fed's going to pivot. However, when the Fed is going to pivot is unknown as per Powell, but he predicts it might happen sometime in 2024-2025. That's when the Fed will reduce the interest rates again and start the money printers back on, and this will skyrocket the stock market and crypto market. However, there's going to be a trade-off. The trade-off's going to be more inflation. The inflation's going to be worse than the current levels. Please subscribe, and I'll keep you updated.